Hello traders, welcome back. Today we're taking a closer look at Bitcoin on the 2-hour time frame. Right now BTC is still holding within its overall uptrend structure. And this is important because the 2-hour chart gives us a clear balance, not too fast like the 15-minute but not too slow like the daily. It's the perfect lens to see where demand and supply zones are playing out. Now let's talk about the demand zone. Currently, Bitcoin's demand sits around $114,947 to $115,000. Think of this level as the floor, the foundation where buyers keep stepping in. As long as BTC holds above this zone, the bullish structure remains intact. Why does this area matter so much? Well, historically, every time Bitcoin dips close to this region, buyers rush in and push the price higher. That shows us there is strong confidence from the market that 115K is a fair entry point. And as long as that buying interest continues, the uptrend has a solid chance to carry on. But of course, if we have a floor, we also need to look at the ceiling. That ceiling is the supply zone, currently sitting between $117,600 and $118,800. This is where sellers are likely to show up. If price climbs into this zone, there are two big scenarios. Scenario 1, Bitcoin breaks through this supply zone with strong volume. If that happens, it signals buyers are in control, and we could see a continuation of the bullish trend, potentially aiming toward the next resistance above 120K. Scenario 2, Bitcoin tests the zone but fails to break it. That rejection could spark a pullback, sending the price right back toward the 115K demand zone. So, what does this mean for traders? It means these two levels, 115K and 118K, are the key battlegrounds to watch closely. Now, for anyone new to trading, let's simplify these terms. A demand zone is an area where lots of buyers enter the market, creating upward pressure. A supply zone is the opposite, where sellers step in and put downward pressure. Mastering these concepts is essential, because supply and demand is the foundation of price action. Looking at the structure right now, BTC continues to print higher lows and higher highs on the 2-hour time frame. That's the textbook definition of a bullish trend. So yes, the bias remains bullish, but let's not forget, Bitcoin is a highly volatile asset. Pullbacks and short-term corrections are always possible, even inside a bigger uptrend. The smart play here is patience. If BTC holds the demand zone, it's a sign that buyers are defending the trend. If BTC breaks the supply zone, it opens the door to new highs. But if BTC fails at the supply zone, expect sideways consolidation, or even a deeper correction back to support. This is why having a plan B and plan C is just as important as your main scenario. Trading is not about being right, it's about managing risk and reacting to what the market shows us. So let's wrap this up. For now, Bitcoin's outlook stays positive as long as price does not break below the 115K demand zone. If that floor is lost, the bullish structure could shift to neutral or even turn bearish. But if it holds, the next big test will be the 117,600 to 118,800 supply zone. Break through that ceiling and 120K could be right around the corner. Fail at that ceiling and we're likely heading back down to retest demand. Either way, these two zones will decide Bitcoin's next major move. And as always, remember, this is not financial advice. Manage your risk. Never trade with money you can't afford to lose, and always stay updated with the latest price action. That's it for today's Bitcoin update. Thanks for tuning in, and I'll see you in the next analysis. Until then, trade safe and may your chart stay green.
I wanna take you out, baby, more. Oh, tell me what you feel, can I give you more? Oh.